Hi, this is Roger Conrad. I'm editor of Utility Forecaster. What I want to talk about today is a little bit of an expansion on an article that I wrote in Utility Forecaster Weekly, and it was called Regulation in the Age of Obama. Certainly, we've seen some tremendous changes in the way that Washington regulates. We've seen some colossal failures, you could call them, particularly regarding the oil spill in the Gulf. But there has been a quantitative change, a qualitative change as well, that I think investors really need to be aware of on a number of fronts. Now, in Utility Forecaster, we cover a number of industries, primarily in the essential service mode, and three of those being water, communications, and then energy, electricity, as well as natural gas and heating. And all of those areas have been affected by some rather major changes in the Obama administration. We've been covering those in Utility Forecaster. Again, in this article, I attempted to touch on some of the major points there, but a couple of things I think we need to really keep our eyes on here going forward. And one of these, of course, is what's going on with the Federal Communications Commission. We obviously have a pretty big commitment in communications in the Utility Forecaster, with some large communications companies, some smaller rural-focused companies, and all of them have been hit, all these stocks have been hit by uncertainty regarding what the FCC is going to do. Is it going to become more severe? Is it going to regulate things like broadband service as they regulate basic telephone service now? These are tremendously controversial issues. They're being battled out in Congress right now. My opinion is that the affected parties, the telecom industry, is already reflecting the worst case in these areas, and that would mean a move to much tighter regulation. You look at the valuations on some of these, even companies like Verizon and AT&T, which are growing their wireless businesses rapidly. Verizon just kicked off a lot of its rural wireline base, its traditional phone base, so it's now much more of a wireless company than it's ever been before. AT&T, of course, has been moving very rapidly in that direction with the iPhone. And both these stocks have just been really shellacked. You look at their yields, pretty close to 7%, historic highs. They are at 50% and less to the values that they were back in the late 1990s, when arguably AT&T, which was then SBC Communications, Verizon, which was then Bell Atlantic, were much less valuable as companies. They were facing tremendous competition in all these areas. No one was giving them any credit in the wireless area, even though they were granted major licenses in the round of auction. Pretty much all anyone could focus on was the loss of the traditional phone business. People thought the local and long distance companies would be eating their lunch, and instead they persevered, they triumphed, and now they're at the top of the industry. But investors have treated them like basically lepers out there, and again, a lot because of this FCC issue. Again, there are a lot of uncertainties. The market hates uncertainty, and I won't say that there aren't some things to be concerned about here. Obviously, if they did take broadband service and turn it back to traditional phone service, some of the profit would be cut out of the business. I think a lot of the competition would be cut out of the business because it'd be much less of a lucrative business to get into. But again, these are the issues that are affecting these stocks, and that's why they are at such low levels. But let's say that we don't get this worst case. There are 70 Democrats in Congress, as well as every Republican in Congress that have registered opposition to the FCC taking these steps. So that's a pretty good block of votes, and even though the Democratic congressional leadership seems committed, or at least has been vocally committed to doing what the FCC wants, looks very much like they wouldn't be able to get what they wanted even this year, and very likely much less next year when we see a new round of people coming in. And if previous congressional elections are any indication, there'll be a lot more Republicans there and a lot more people that are opposed to taking these steps, which would be somewhat draconian, I believe. So in any case, there's a good reason to believe we won't get the worst case, and that these stocks will again rally from these levels. So I don't think there's a lot of risk here, but I think there's a lot of upside, and I think bad press notwithstanding, they continue to perform as businesses, continue to generate very strong earnings. Very nice combination. So that's all I have to say today. Of course, this will be an issue that we'll be tracking very, very closely in the coming months, and as long as there's a Obama administration. Of course, politics and regulation go hand in hand, always a very important issue. But let's not get carried away here. I think there are some tremendous values that have opened up in the Obama regulation age, and I think we're going to see some tremendous profits from them. Thanks for tuning in once again. We'll look forward to chatting with you next time.